Hey everyone, it's Rod with Pow Group. Welcome back on the Pursuit of Wealth, your home for MJ stocks, crypto assets, and interviews. Also home to the best MJ community on the planet. Today is Saturday, August 12th. Hope you're doing awesome and hope you're having a great weekend so far. In this video, by popular request, we're going to be charting and doing some technical analysis on the ETF, ticker symbol MJ on the NYSE. We'll discuss the monthly bounce that is currently underway and whether or not I think, in my opinion, if it's a good time to buy. Of course, I'll never tell you to buy, sell, or hold. This is for entertainment purposes only. This is not financial advice. And again, everything that I say is just my own thoughts and opinions. And the best way you can support the channel is by liking this video, sharing it, subscribing, also ticking the bell. You'll be notified on any future live streams or whenever I post a new video. Also, speaking of supporting the channel, you can go over to x.com or formerly twitter.com, and you can follow Pow Group on X, which is at Group Pow. So again, the handle is at Group Pow. I'm going to be using that as my social media platform of choice going forward. And it's the best way for me to get as much real-time updates out to the community as possible. But taking a look at the chart here, so MJ is now down over 91% from the highs of February 2021. And then if we go back to the all-time highs to the all-time low, you're looking at about a 92.5% of downside. Right now, we're currently monthly oversold on the relative strength index. So if you don't know what that is, you can just go here to indicators on TradingView. If you don't have a TradingView account, you can just go over to the Pow Group YouTube channel, click on About, and then there's an affiliate link there for TradingView. I will get a kickback if you do sign up for that, but essentially just go in here, click on relative strength index. It will put this indicator into your charts. And if you know nothing about technical analysis, and that's a lot of people, right? Less than, I would say, 5% of the people actually know how to properly use technical analysis and read charts. But if you know how to do it, it's like having a major edge on the market, right? And just this indicator alone could make you trade better than 99% of retail traders out there, because what most people do is they buy the FOMO, right? They want to buy when things are cool. They want to buy when everybody thinks it's a good investment, and then they FOMO buy, right? Fear of missing out. And then when things are going down, they panic sell, right? They're fearful. There's blood in the streets, and that's where they panic sell, right? It's the exact opposite of what we're supposed to do, right? The whole market is designed to make you feel some type of way, and that's why you want to buy up here, is because the stock market in crypto is the only place on the planet where people don't want to discount. People don't want to buy things when they're low. They want to buy them when they're high, and they want to see it go higher, right? Which is just a weird phenomenon when you think about it. But all the RSI is doing is showing whether or not something is overbought, overvalued, or undervalued and oversold. Anything around 30 and below is considered oversold and undervalued. Anything at 70 or above is considered overbought and overvalued. So if we take a look at this chart right now, we are currently in monthly oversold territory. We are currently below it at 29.2. So right now we are below 30, which means we're monthly oversold. And when you're oversold on a time frame such as the monthly, that is very, very significant, because it doesn't happen very often. You can see here, this is the most oversold we've been in its history, right? So essentially, you're able to go back to where the RSI was in March of 2020 in the C19 scare, right? So we're even lower than that. And again, I'm not telling you to buy, sell, or hold. I'm just saying that as of right now, the RSI has never been this low, meaning that we've never been this undervalued. And if you just sell when we're close to monthly overbought and then buy when we're close to monthly oversold or monthly oversold, then you'll probably do better than 99% of people out there. But everything in the MJ space right now, doesn't matter if you're profitable, unprofitable, retailer, producer, US producer, Canadian producer, retail in US or Canada. It doesn't matter if you're an ETF. Everything is down over 80 to 90% plus, on average around 90% from February 2021 highs and all-time highs. We're starting the monthly bounce here on MJ. So if we can see EMA 12 resistance test, that would bring us up to $4.28 to EMA 12. And if we take a look at some of our names like Tilray, one of the leaders in the space in terms of dollar volume, you can see here we're starting the monthly bounce and we're starting to trend back to that monthly EMA 12. So what usually happens is ETFs are laggards because they have a basket of different holdings, right? So for Tilray, the leader in the space, this is good to see. This is what we want to see, because that is going to mean that a lot of the tier 2, the tier 3s, and the medium caps and the smaller cap names are probably going to start to follow the leader in the space, Tilray. And then if we take a look at MJ, again, if we were to, from current price, if you were to add here, set your stop below 291, which is the recent low, that's fairly low risk, right? Essentially, you're risking about 5%. You could even set your stop under, say, 250. It all depends on how much money you're willing to throw at this, right? If you're throwing 5 figures, maybe you can risk a little bit more. If you're throwing 6 figures, maybe you're not okay with risking any more than 5-10%, right? But maybe you're throwing $1,000 and you don't want to do a stop loss at all. You're just going to wait until this thing goes back to all-time highs or the US legalizes, whatever your time horizon is, or whatever your metrics are. What are you going to wait for a certain time period? Are you 65? Are you retiring in a few years? Are you 25? Are you going to be holding this for 20, 30 years? Are you going to hold it until the US legalizes, at the federal level, recreational? So there's all these things that you can start to develop a game plan. But right now, there's never been a better time, in my opinion, to load up on MJ with very, very low risk. I mentioned VFF in a previous video a couple of days ago, and also to POW Group private members, that the monthly bounce is very close to being underway. We had a monthly inside bar that broke bullish, and I said if we break 68 cents, the monthly bounce will be underway. That'll be the first time in a year. Take a look at that. First time in 12 months, 365 days. And then even if you just entered on a break of 68 cents, you would have made almost 30% swing trade. So this was on monthly oversold as well. So again, we're starting to see individual names do it. So that increases the odds that we could see MJ do the same as well. And again, if it just does what Tilray does and what VFF is on trend to do, that would put us around EMA 12. They're around, like I said, $4.28. But then we still need to confirm the monthly uptrend. We're starting the monthly bounce. Then we need a higher low followed by a higher high. And we need that in all names, not just in Canada, in the US names, the US producers as well, retailers in both Canada and the US, and ETFs in both Canada and the US. Once we see monthly uptrends across all of our ETFs, like MSOS, MJ, HMMJ, right? Those are going to be the patterns that we need to see and the indicators that we need to see to be confident that the bottom is in, right? We need that high, higher low, and higher high. And then we'll want to see golden crosses across the sector as well, with the 50-day moving averages below the 200-day moving average and crossing. Look what happened the last time we saw that on MJ. Price was at around $13 and flew all the way up to about $32. Then we had a death cross with the 50-day above the 200-day moving average. When they crossed, price was at around $15, and we went all the way down to just under $3, right? So now we're even more beaten down than we were the last time go around, and this was just on the Democrats taking control of the Senate in hopes of legalization. Imagine if we get HHS reviewal to, maybe they reclassify MJ to Schedule 3. That solves 280E tax burden. We get safe banking. That doesn't solve 280E, but both of those catalysts could happen here into the fall. We could even get German legalization, which experts are saying that it could come out as early as next week. And then into the end of the year, 2024, we see Germany roll out with legalization. And then we could get legalization of medical in the US as well. There's so many catalysts. The Canadian government is currently reviewing the MJ Act here in Canada. So again, we could see this golden cross over the next, in my opinion, the next several weeks and a couple months leading into the fall. I think we're going to see some massive, massive upside. But if we take a look at the 10-week moving average here, we are back below it. We closed just under it by about 2 pennies at 308. We closed at 306. We're still bullish on the stochastic, but we're close to seeing a bear cross with the black crossing down through the red. That is bearish, but the MACD is still bullish as well. But we want to see a weekly candle close over that 10-week moving average next week to be back into bullish momentum territory. But in terms of the weekly moving averages, we have nothing nearby until 408. And then, like I said, the 200-day moving average there around 391, and a lot of names are starting to trend back. Look, Tilray got over its 200-day moving average. So if Tilray can do it, why can't MJ do it? That'd put us around that $4 mark. And again, we'd be finding resistance there around the 50 weekly as well. And again, take a look at Tilray. It actually got above its 50 weekly moving average rather, and its 10-week moving average. If we take a look at the 10-week moving average, you can see here well above it. Look at the stochastic and the MACD starting to go parabolic. So if we see something similar, I think MJ could be a nice laggard, right? Because again, usually the tier ones and the larger cap names move first. When we're down 80, 90% plus in the whole sector, usually the tier ones will run first. And then when profit taking occurs, we'll start to see the other names start to act as laggards, and they'll run. And because it's an ETF and it's comprised of tier ones, tier twos, tier threes, right? Large cap, medium cap, small caps, it's going to take the ETFs a little bit longer to catch up. But in theory, we should start to trend higher back to those 50 weekly moving averages and those 200-day moving averages, and that will put us around $4. If we get over that 200-day moving average at $4, we have some runway to the 100 weekly there at 670, and then the 200 weekly there at 1089. So again, we're looking really, really good here into the fall. And I would say that the most likely catalyst that we get to knock us out of this bear market is going to be HHS reclassification. I think Schedule 3 is the most likely, and there's even a chance that we could get safe banking passed at the same time. But not going to hold my breath, but I think our best chance is getting Schedule 3 or higher. I think that's the most likely is Schedule 3, and then they'll do it in a phased approach, right? They'll start with Schedule 3, then maybe they'll deschedule it and treat it just like alcohol and tobacco. But again, I don't think they're going to do that. If they did, great, but I'm all about being a realist on this channel, and I think the most likely scenario is seeing Schedule 3, but that would remove 280E tax burden, and that would send this whole industry just in parabolic moves to the upside and euphoric, like we would see euphoria like we've never seen before. I think it would be the biggest catalyst to date. And some of our names in the US are going to absolutely explode, but the Canadian names are going to explode as well because it's going to be bullish for the entire sector, right? So going down to there, let me know if you hold MJ in your portfolio. The ETF, let me know how much of your ETF or how much of your MJ portfolio is allocated to that ETF percentage-wise. I have about 5% of my MJ portfolio allocated to MJ. I'm not the biggest fan of the holdings. I may look to sell maybe half of my MJ position and purchase some HMMJ with it. But even then, some of these ETFs, I'm not that impressed with the holdings, and it is actively managed, so it does fluctuate. But the ETF MSOS for those in the United States, if you're unable to buy the GTIIs or you're unable to trade OTC, MSOS is a great way to get exposure to the American names because it's traded on a US major exchange. So if you are in the US and you can't buy OTC, or you can't buy these other names like GTII or Trulieve because they're on the CSE, the Canadian Stock Exchange, a great way to get exposure is through the MSOS ETF. But going down it there, thanks again for joining us on the Pursuit of Wealth. It's Rob with Powell Group. Hope you have a great rest of your weekend. We'll see you on the next video.